And hi, everybody, it's Tim Reazor, the Chief Investment Strategist here at Revere Asset Management, just after 5 o'clock on a Friday night. Stock numbers, market levers. So really big week here. And I want to highlight something that we did this morning for you in the video podcast. And so we taped it early this morning, and it's up. If you go to revereasset.com under Daily Market Insight, you'll see it there. And for some reason you don't see it there, you can get a hold of me here. I'll show you how in a second, and I will send it to you. This by far is one of the best shows we've ever done. And we talk about our process here so much and how you can use it at home, all in an effort to empower individual investors. And so we give you one of our most powerful screens. You can run it every day, every week. You can do the settings, you can adjust the settings. We show you how to do that. We show you what really makes up that 70-30% technical fundamental. It's fundamental technical, and why it gives us an advantage and how it can give you an advantage. And then we talk about our entry rules and our sell rules. This, I've seen, there are a lot of people out there that would charge you for what we gave you today, and we would never do that. And so we're here to help you and empower you. If you can't find this headline under Daily Market Insight, under Revere Asset Management, all you have to do is hit this contact button and I will come to your rescue. Just email me, tim@revereasset.com. You can email Don if you have any questions, or you can't find it. Don will talk to you too. Danny, America's fiduciary, right there. I can't begin to tell you how much I want you to watch that class. Oh, we go over all that, what I just covered with you. And then we talk about the levels for the indices, why we sold some things that we sold, why we bought some things that we bought, and we give you a watch list for next week. And so 855-732-5932. If you have any questions, concerns, comments, take umbrage with anything that I'm saying, or if you'd like to become a client of the firm, you want to know how that's done. If you like the strategies to which we espouse in these videos and in that video podcast, we'd love to do them for you. But even if you don't want to become a client and you just have questions, don't ever sit at home wondering or subject yourself to endless Google searches. Just call us. We can help you, and we're more than happy to do so. We'll never hound you. You're not entered into some marketing system. We don't do any of that. We don't have any salespeople. We're just here to help you. And if you want to become a client, you tell us that, and then we send you some DocuSign forms, and it's super duper easy. And we don't custody assets. That's always, if anyone's custodying assets where you live, that's a red flag, folks. We're not custodians. We're strategists. We execute. And it's a big differential. But 855-732-5932 is how you would do that. So listen, let's do this. I want to show you. I cover all the normal stuff in the video podcast this week, but I want to show you something, because when I'm looking at the indices here, and you're gonna hear some things like, oh, the markets are running out of steam, and they might be. Markets might absolutely be running out of steam, but the charts are still bullish. But I want to show you something that would really catch my attention, more so than like if the VIX were to invert, which we go in depth. If you don't understand VIX inversion, we go in depth with VIX inversion in the video podcast and why it's so important. Or if you've started to get some, I was on the chart I needed, or if the moving averages started to drop below the 21, and we go why the mean is so important. Like, we really explain this in a way that is so beneficial for you to understand why this right here is your low risk entry point. And it's why that's where I bought SSO, that's where I bought gold, silver. And that's why on Wednesday I was adding for newer clients that had come into the firm with Danny, adding equities that had given me the same opportunity as was flashing on this NASDAQ futures chart. And we explain all of that. But there's something that I've really never discussed with you that or as in depth as I'm going to right now. And so if you have Thinkorswim, you don't have to have Thinkorswim to find this information. But if you have Thinkorswim, you can come to the Analyze tab. And under the Analyze tab, you will see something called economic data. Okay, and in economic data, what I want you to do is type in the word Michigan, and then this is something that I do study. And just click on consumer sentiment. Now, I'm always telling you that it's never one piece of information in a vacuum. So this is just one piece of information for you. And so the preliminary Michigan survey was out today, and it was expected. No big deal is what I'm trying to say there, and you can see that reflected in markets only. If I can just let's come back to this chart, and just so it came out at 9 a.m. Central. We take this down to a 5-minute chart. So here is let's get. Did I not? I went back too far. I'm like, gosh, where's that chart headed to? Here we go. So here's 8:30, cash open, and it comes out at 9. And what happens around 9? Yeah, a little shoot down lower, and then there. So it digested. So the number comes out. It's going to be a little less than expected, and then the markets do that. No big deal. That's the NASDAQ. The NASDAQ had the worst of it. If you look at, say, the S&Ps in the same time frame, 8:30, no big deal. It comes out at 9. Here's 8 o'clock, 9 o'clock, and really not that big of a reaction. Markets go higher from that point. But when I'm looking at that Michigan survey, what I need to explain to you is the reason why I study it so much is because this survey is what consumers think, and it's spending. Look, and I'll just write spend here. And you got to understand, we're 70 to 80% of a consumer-based economy, meaning we're spenders. And so you'll notice there's certain points in time, like just for your reference, here's 100, that you start getting over that 100 level, and that's almost akin to a put-call ratio where everybody is bullish. And so what you want to be on the lookout for are topping patterns in stocks. So you want to look at the top, you want to look at the S&Ps, and the NQs and the Dow and all the other indices that we look at every night. And so let's pretend that we got 2 closes below the mean, the 21 exponential moving average, which would, on a daily chart, now would indicate kind of a shift in trend. And if I saw the consumer sentiment, now this is January and it doesn't happen all at once. If I saw the sentiment report and it was lower, that tells me something. It's a big honking deal, because if we're going to stop spending, a lot of stocks in the economy are going to stop growing. So then let's zoom into this moment in time. So here, and I'll zoom in, this is February, February was above 100, okay? And then the inklings of the pandemic, and you can see as you get into February, now you got to think there was March. Oh, excuse me, let me get that mark up there. There's March, it bottoms in April, and it starts ticking higher in May. This is on the upswing. So as long as this is on the upswing and the indices remain sideways to trending for the most part higher, and sometimes you want to get out of the daily chart. You want to get into weekly charts, or what I look at here, and I was doing with you for just a number of weeks now with this S&P weekly chart, highlighting with you the flat base after 2 closes above the 21 shift in trend, the flat base that developed into the most bullish pattern I know, 3 weeks tight, and now you've got this action here, and the reason why people are saying it's probably pausing here and struggling, because you're at the February 19th highs, so to speak, meaning you're underneath where the market just made a new high. So there's a lot in here, but I'm telling you, this will revert back to the mean and maybe possibly lower if consumer sentiment starts to do this. You'll see markets, this will be the next leg lower. So you had this 3-month dip in consumer sentiment, markets bottom, so they don't match up. Markets bottomed at the end of March, right? People say March 23rd was the bottom, but you don't know that until everything's clear in hindsight. So March markets bottom, consumer sentiment doesn't start to rebound until May. And I know that's subtle to see, but it's a leading indicator. And so you're like, well, Tim, how do I use this? So look here. So here's July. Let's just find May on this weekly S&P chart, because what a lot of people suffer from is the fear of missing out. Like if you're not there on the day participating, you think you've missed it. And I'm just trying to tell you that you don't have to be perfect, and there's time always typically on your side. And so if I'm looking here, so here is, what date is this? It's May. So here's 5/11, here's 5/4, so we're in May. So May, 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 mother may I. And so you get your two closes above the 21. That does what, my friends? It coincides with the rise in sentiment. So even if you got in to the markets and you just did a few normal stocks, and we'll look at like the stocks that you don't have to be exquisite, like exotic, like Fastly and Livongo, and just do Amazon, Apple, Tesla. We'll do Walmart too. We'll look at them all. And you like May. Well, this is the last week of May, and you're just at or below around 3,000. 300, 400 points in the S&Ps is a lot of points. Every S&P point equals 8 Dow points. There's a lot of money to be made. You didn't miss anything. What you didn't have if you weren't participating, what you didn't have are the facts. And so even though you didn't get in April, and maybe you're like, I don't believe it, I don't believe it, I don't believe it, and you're taking the weekly chart approach, you can use this as a leading indicator to help you. Okay, but they will sell off stocks if this drops precipitously. I've seen it too many times because it's one of the few economic things that I study, just with the regard to which I'm giving it right now, because I've seen it. And by the way, if you see this dip and you see the VIX futures invert and you see the indices start to crater, what you don't want to be is putting your head into the sand and saying, oh, I don't believe it, I don't believe it, this economy's finally turning. You want to believe it. And just like this chart, you won't be late. Because look, were you late to sell two closes below the weekly 21 here at roughly the same price level before it went down to 2,200? No. And so even though at Revere Asset, we're quicker to have much quicker to act, as you know, and you've seen the performance during the pandemic and seen exactly how we differentiate ourselves with every other person or every other shop in America and the free world and China. But you haven't missed out. And a lot of you, I know, because you write to us, you're hitting us up on Twitter, you're emailing us, and you're calling us. You see the unemployment, you see the jobless claims, and you see the bankruptcies being declared, and you're just like, how is this market continuing to do this? And for me to tell you, well, this is why, and this is why, look, we can do that all day. What I want to show you are some things that I know tried and true matter. And absolutely positively, one of those is consumer sentiment, but you need to know how to find it. And this is how you find it. In Thinkorswim anyway, you can Google it, but I like charts. I need to see it in chart form, not word form. I want it charted for me. And Thinkorswim, in fact, does that for you. And so let's look at May and take a look at a number of stocks. And some of you are going to go, well, of course, it's all hindsight though, right? Let's look at Apple in May. So here's May, right? Here's April, and we're still on weekly, okay? I haven't changed the time frame. Here is 5/4, okay? So 4/27, 5/4. So right in here is May, okay? You get two closes above the 21, and you're at May, and you're at 300. You're now from 300, 310, whatever you want to call it, up to 460, okay? How about, let's do something boring, right? Let's do Walmart. Let's see, Walmart. Let's see, 4, 5, here we go, Walmart. So this, not a sexy sector, right? But it's Walmart, and so let me get that set up. Get my marker. Walmart takes a dip, but it's still higher than that level. And it's about to report earnings coming up. So This candle here isn't quite earning, so still doing all right. And old boring Walmart. You guys know Tesla, right? Let's think of Target, man. How about Target? Does Target look like Walmart? No, Target fared a little bit better. So here's Target, 2 closes above the 21, and away it goes. So Target, we'll do Costco, right? Not sexy tech, COST. May. Consumer sentiments shifting higher. Costco, a little bit dip down here after earnings, but still higher. And what's higher too? Consumer sentiment. How about Big Lots? BIG, the notorious. Let's see here, 427, 511. Okay, 2 closes above the 21 here. You get a boost from earnings, and before you know it, Bob's your uncle, you're at $50. And so, okay, Tim, well, do General Motors, which this is in my book a laggard stock. Let's do General Motors. Why not? Okay, here's 5.4. Are you higher with consumer sentiment being higher since the middle when that survey comes out? Yeah, you actually are. I mean, barely. It's a laggard stock. How about give us some more laggards? UAL. Is consumer sentiment turning higher in May? It is, and you're still a little high. You're 29 to 36. 30 is not so bad. How about PVH clothing? Phillips Van Heusen. Not my cup of tea. These are all laggards. Let's see. 511. So consumer sentiment's turning higher. And where are you at? 44, 45. You're 10 points higher. I mean, even in the junk, you can see that when consumer, and it makes sense to you, right? Like a consumer sentiment turns higher, consumer stocks tend to turn higher. Well, let's say you don't know any names, but you just know retail. XRT. So an XRT is not, it's not always leading retail, believe me. There are little positions that make up this ETF. So here is May, and then you get this jump. Consumer sentiment does what? What's consumer sentiment do? Here's April, right? And then we're gonna, May comes out, but this is the May time frame. Consumer sentiment, turns higher. And what does XRT, the retail ETF, do? Turns higher. We've documented Restoration Hardware. Okay, here's May. Okay, a little bump from earnings, and then away you go. Kroger, one of the hardest sectors to do, one of the hardest places to make money. Kroger. And so we're on a weekly chart still, 5.4, 5.11. Okay, so 5.20, here's May, and you get that earnings, and then it moves higher. Not really probably the best, because it's not trying to prove my point. You know, they could go lower, but it's trying to show you that there is a correlation to this report, and we're a nation of spenders. And so what you want to do is you don't want to dig your heels in, because look, what's going to happen is the correlation here is, so 70 to 80% is consumer-based spending, right? But also when stocks go down, they drag 70 to 80% of all stocks with them. Like when markets go lower, you know, when the S&Ps, the NASDAQ, the Russell, the Dow go lower, 70 to 80% of stocks follow. So what you don't want to do, and this is probably really the most important thing I want to tell you tonight, what you don't want to do is drag your heels and say, just dig them in and go, I was about to spell drag, and say, it's Apple. Apple for sure, for shizzle, is not going to go lower. It's Apple. No. Apple, people buy products from Apple, and they buy services from Apple. Okay. Well, then Tesla. No. They buy cars. Well, Zoom. Companies are going to need to be Zoom. Well, if companies are laying people off, and that's because they're laying people off because nobody's buying products, so they don't need technology for the company to support the business that sell to people like us. And you can absolutely positively see how it's very circuitous. And so what you don't want to do is, if you were to see, say, ES on a daily chart, change course and start closing 2 times below the 21, which probably means it's if it don't find support at 34, it's going to the 50, all the way down to 3,200. That's 300 points, 363 points lower. 363 points lower. And if that move were to coincide with, say, the VIX inverting, and oh, by the way, this trending lower, Katie bar the door, my friends, because it's about to get ugly. Hopefully that all makes sense. And if it doesn't, don't sit there and go, what the hell did he just say? Call 855-732-5932. And just as important tonight, I can't begin to tell you how important it is. Watch this video podcast. It's going to be one that you want to download, and you can download them. You can download them right from our platform. They're free. We don't make you register for anything, and you can pass it on, and you can save it, and you can reference it. Okay, with that, my fellow stock owners and market lovers, we love you so much. We have grown tremendously, and I just can't say the word tremendously enough. We have grown because of you, your word of mouth, your trust, and you talking about us to your friends and family. We don't advertise. You are a word of mouth, and we can't say thank you enough for all of your help and all your love and all your support. With that, I will see you at the next update.